Good evening and Happy New Year. You're watching ANCA Moneyline, your money guide. My name is Sikim Gabadeli. Coming up on the show tonight. The oil price collapse continues to give consumers more reprieve, with the petrol price set to drop to its lowest level since August 2012. Uber gets some bad publicity as the transport business is asked to cap its surcharge practice. And we take a look at the best and worst stocks on the JSE for 2014 and look forward to market trading for this year. All that and more coming up, but first, your top stories. The price of petrol is set to fall by around R1.27 a litre on Wednesday. And even though it's good news for consumers, it may not be such good news for the country's economy.
The price of unleaded petrol will drop to its lowest level since August 2012, the main reason the recent collapse in the price of Brent crude. With the United States approving shale gas exploration, demand for oil by the world's #1 economy saw prices plummet.
We're a big user of oil. We're not a big producer of oil. We're a net user and we need low oil prices. Low oil prices are generally a net benefit for this economy. It's a major input into not only industrial processes and logistics and transport, but just household costs in terms of people's transport.
The rand has weakened in the last month, but this was offset by oil falling to around $55 a barrel. The month's drop in the petrol price will increase disposable income by 0.5%. That means on average an extra R5 to spend for every 1,000 rand earned. This, however, also depends on how much people spend on fuel and transport. It's a great start to 2015 for consumers, but a mixed one for South Africa's economy. A petrol price drop of more than R1 across the board is set to help consumers in the cash-strapped month of January. But with trade data still showing losses as commodity prices continue to fall, it's clear that not all that glitters is gold. But on the downside, the fall in the oil price has meant that countries that were providing an expanding market for South African goods will now struggle to support the growing Africa story. This doesn't bode well for Africa's #2 economy.
Yes, we get some benefit from cheaper fuel prices, but those provide, if we're honest, fairly marginal savings for the economy as a whole. So they certainly benefit at the margin, but it's not as big as it needs to be to fix a really struggling economy. And then, as you say, to the extent that we become exposed to countries that are suffering from an oil price decline, there may be some problem.
The drop will see inflation dip to around 5% or below, according to estimates. The good news may not persist if the Organization of the Petroleum Exporting Countries decides to cut back on oil production. But for now, consumers agree this is a great way to start a new year. Arabile Kumete, Johannesburg.
Well, analysts believe extra hard work may be needed this year to achieve good returns on the market. And with the JSE now in negative territory, we're taking a look at the stocks that performed well and not so well in 2014, while we also unpack who to look at for 2015. Joining us in studio is Gary Boysons from Vunani Private Clients. Gary, thanks so much for your time today. Probably not the best day to have this conversation, given what the market did today. But just let's take a look back at 2014. Wasn't shooting the lights out either.
No, it was definitely a difficult year on the market. There's no question about that. I mean, we were looking okay, but the last 2 quarters really brought down the total returns. But if you look across it, we had the winding up the QE program, which obviously had a huge impact on markets. We also had a very strong dollar on the back of that, and then sort of an unprecedented collapse in commodity prices towards the end of the year. So that obviously putting a lot of pressure on resources.
And that had a big impact on our market. Absolutely. In addition to that, the strike action that we saw. So would you say then that the majority of the worst performing stocks would probably be of the resources variety?
Yeah, I don't have the exact numbers now, but I think the resource index, if you look at the Resi 20, it was down, it was almost 20% by the end of the year, compared to the financial index, which was up almost 17%. So you've got a clear segregation between the two sectors.
And looking at some of the best performers, it was a bit of a mixed bag. You had some companies in pharmaceuticals, you had a retailer here and there. Mr. Price continuing to do well, even though we've seen the other retailers, feeling the impact of the consumer spending slowdown.
Yeah, I think in the retail sector specifically, you've got to look at the quality of the business. So I mean, our two favourite retailers throughout 2014 were Mr. Price and Woolworths. Yeah. Woolworths won because of its huge exposure now offshore through its David Jones acquisition. Yeah. But definitely Mr. Price. I mean, it's a fantastic business. It's gone from strength to strength over the last 10 years. And I mean, if you look at it, it's probably one of the only retailers in South Africa that has a viable online business. And we think there's going to be a huge amount of growth coming through from there. And I mean, they're opening new stores. And again, you talk about the South African consumer being under pressure. This is a retailer that offers that fashion value. Yeah. So I think there are definitely still good things in Mr. Price's future.
Naspers also doing well. Was that just the 10-cent play?
I think if you value Naspers, the majority of it is going to come from its 10-cent investment, and a lot of that I think also coming from the weakening currency. So you've seen obviously the rand weaken throughout 2014, and that really feeding into Naspers. But I mean, again, you can't really take anything away from Tencent. I mean, their results have been spectacular, and they've been proving critics wrong time and time again. Yeah. I think our latest valuation on the company, we're putting the share price north of 2,000 rand a share. So I mean, wow. We still even for a company that's grown as Naspers has grown, we still see that there's a lot of growth in that future in its future.
And in 2015, what are the themes that you think are going to dominate?
I think we're going to see a continuation of this resource slowdown. I think the pressures, especially that the local miners are under, with electricity constraints, the labour issues. That's a theme that is going to continue, as well as falling commodity prices. Yeah. So we think they will remain under pressure. I mean, seasonally, you should see a tick up in them in the first 3 months of the year. So maybe a little bit of relief in the short term. And then, I think, again, it's going to be an interesting year. I mean, already we've had ructions around the Eurozone, that whole crisis flaring up. Yeah. We're going to perhaps see the US raising interest rates going into the end of the year. So, I mean, if I had to pick, say, one stock for 2015, I think I'd probably be looking at something like Steinhoff. Now, that's a company with big exposure into Europe. Yeah. We've got the ECB stimulating now, and they've got a listing coming up in Frankfurt as well, which we think is going to generate a lot of interest in the company. So that, if I had to pick one company, I'd probably
Who would you stay away from?
Yeah, I think it's always a difficult one, but I think like the resource basket. I mean, after that short-term bounce, I mean, we've been underweight resources perpetually at Funani, and I think we'll probably continue with that theme.
What do you think is going to happen with Sasol? I've met a lot of unhappy Sasol shareholders during the holidays, and today closing just above 400 Rand for a stock that was north of 600 not too long ago.
Yeah, I think if you look at Sasol, about 40% of its revenue comes from oil. I mean, it is diversifying dramatically. I mean, if you look at Sasol, obviously they've got that ethane cracker that they're building in Louisiana. I mean, and they're trying to diversify away from oil, I think. And I mean, a couple of months ago they published on SENS saying that they're taking the company in a whole new strategic direction. Yeah. At the same time, you've also got a huge cost-cutting initiative in place through their Project Phoenix. And I mean, I think Sasol as a company has a bright future. The problem is that it's so linked to this commodity called oil, and until we see a recovery in the oil price, which I mean you will, I think, see it eventually. I mean, this price war between sort of the Saudis and everyone else, and the collapse of OPEC, it's not going to last forever. I mean, oil, I think, will rise back to sort of $80-90 a barrel plus, despite the pressure it's under now, and then we should see some recovery in Sasol.
All right, we'll leave it there. Thanks for your time today. Gary Boysons is with Funani Private Clients. Well, Africa's largest economy is rethinking its economic approach. Nigerian policymakers say foreign investors and a heavy reliance on oil have prompted a change in how the country measures GDP.
Nigeria's growing capital market is receiving interest from abroad. The finance minister says rebasing GDP will help the country fix its challenges and take advantage of new investors.
We don't want to risk solving the wrong problems because we don't have adequate information or statistics, or solving problems in the wrong way. That's why this rebasing is so important.
Although the International Monetary Fund has highlighted the growth in African economies, Nigeria is still trying to compensate for its mistakes. Despite years of growth, infrastructure is still poor, worsened by power outages and bad roads. Falling oil prices have also hit Nigeria hard, but there's still interest in the country's energy wealth, particularly from China. The Asian giant has already signed deals with Ethiopia and Angola.
I know a lot of Chinese manufacturing is moving into the region because it's cheaper than manufacturing in China now. So the growth has been reliant on external factors. I'm not sure Africa's in a situation yet, and this is a general term, that they're self-sustaining yet.
Investment may be welcome, but there are concerns that China's interests may be too focused on resources while Nigeria tries to cope with the falling oil price.
After the break, we take a look at Uber, the cell phone app that allows you to hire a taxi from your mobile phone. You're watching ENCA Moneyline, your money guide. Stay with us.